Good day, guys. Welcome to the channel. If it's your first time on the channel, make sure you hit the subscribe button so that you can get notified every time I drop new content. If you think that the content that I'm going to be teaching to you is informative and valuable for your knowledge, make sure you hit the thumbs up. If you have any questions or want to add something or would like me to teach another topic, just write that in the comment section. Let's jump straight into it. Today I want to teach you something very important, guys. I know that there are a lot of guys who've been in the industry for quite a long time and they're battling with consistency. Now, if you're one of those people, this is a good time for you to watch this video. It's going to help you greatly. I teach this in my mentorship program, but I'm going to be sharing it with you today. If you're a beginner, these are the most important things you need to jot down and take notes of so that you know and have a clear path to walk through as you enter your journey into Forex trading. So let's talk about now what are the two most important things in order to stay consistent in the market. Okay, number one, it's strategy. Like I wrote here, I wrote this down here because I wanted to dive into more details on the strategy part because I feel like it's the most important. And the second part is risk management. So let's talk about strategy first of all. Now, first of all, strategy, price action. What do I mean by price action? Okay, cool. Like I said before, you come into the market, you have a strategy, or you went to the internet, found a strategy, and you decided to implement it on your demo account. And you win a few trades, but when you go straight into your real account, things turn south for you. You start losing trades, you lose money, you blow an account, you understand? By the way, I don't blow accounts because of what I'm about to teach you today. Most people don't like to take these things seriously, but these are the most important things when it comes to your Forex trading. So this is what happens. You ask yourself, why is this strategy not working? Was the guru tricking me into believing that whatever it is they was teaching was good? Or is it just me? Or is this whole system rigged? Now, it all comes down to price action, guys. If you don't have a foundation in price action, no strategy is actually going to work for you, because what's going to happen to you is you're going to take a strategy and you're going to implement it in conditions that do not align with the strategy or the setup that you're seeing. So there will be no confluence. The most important things in Forex trading is building enough confluence to find the proper direction. So you need to make sure that you understand price action, foundation, basics, go into complex details about price action. Knowing price action is an advantage on itself because price action involves a lot of different moving particles. So I could say there are a lot of strategies that are part of price action, but you'll notice that these are just moving particles, and if you combine these things all together, you'll find one thing that can actually increase your level of profits in the market. Then we come to implementation. Now, implementation of your strategy, first of all, before you even go to demo account or before you even go to real account, you need to go through a process that's called backtesting. And that's the reason why there's paper trading out there, so that you can go to a paper trade account and start practicing whatever strategy you learn or whatever trading concept that you came across on whoever, what guru taught you, whatever. Like, you go to demo account, you start implementing these things. Now, there are three ways in which you can backtest. You can go to previous data, go to your chart, scroll back to previous data and basically find similar setups, or you can go to other trading platforms. I know TradingView has Market Replay, so you can go on Market Replay and basically replay previous setups that had happened. But the most effective and the one that I like is the one that you actually go to an actual chart, a live chart. I love paper trade account. You find your setup, you trade that setup and wait for it to play out. The reason why I like this, number one, okay, I don't like it because it's time consuming and it's very rigorous, you understand, but it does help you get build intimacy, because understand, when you come to when you're developing a strategy, number one, you need to build intimacy. There should be some sort of relationship between you and your strategy. Number one, you need to understand this strategy emotionally. like when I'm talking about emotional, I'm talking about psychology. If you're a trader, you'll know that psychology is the most important thing in this game. So you need to understand the psychological concept of the strategy. You need to understand how the strategy is going to play out. The other two parts, which is going back to previous data and market replay, it helps you identify setups, but it does not really work on your emotions. You understand? Because it's easy like to go to something that has already happened, you understand, and basically see it as a setup. It's easy to do that, but it's difficult to identify something before it has happened. So this is why I say this last method, we're going to a live chart and actually trading whatever strategy that you've been taught, trading it on live conditions and getting to understand it over a certain period of time. The reason why I like that, it's because it combines everything and it gives you more information and it becomes more productive. You become, how can I put this? You become more familiar with the strategy and it's quite easy for you to navigate it and actually trade it. Yeah, with that said, we're still on the process of backtesting. Now there's this other thing. People, when they backtest, they come onto the chart and they trade a couple of times. And then the strategy works and they jump onto the real account and the strategy does not work and they do not understand why. It's because they didn't build enough, they didn't build the relationship, if I should put it that way. So this is what you should do. A strategy should be traded 100 times, a good strategy. If you want to be successful or consistent in the market, you need to trade a strategy 100 times, you understand? And in that 100 times, you need to win at least 40 times. Now, if your strategy is profitable, is 40% profitable, it means that your risk to reward needs to increase, you understand? And if it's 50-50, you can trade with a one-to-one. But my type of strategy, I know on its worst condition, I can take 60 trades and lose 40 times. I can lose those 40 times in a row, it doesn't matter, but I know that at the end of the day, my strategy is 60% profitable on its worst day. But when it's performing at its best, I know that I would take about 90% of profits on the best day of the strategy, you understand? So this is the type of relationship you need to be building with your strategy, understanding how it works. And this is when now you can take a risk management plan and implement it with the strategy. And you'll find that it's all in sync. This is how you don't blow account. Now, let's skip this topic. I think you've actually had a basic understanding of what I was trying to talk about. Now, let's talk about risk management. Okay, cool. Now, with the risk management, most people tend to actually blur the lines in risk management, and some people don't actually explain it correctly. Some like to complicate it, some like to just jump into the risk to reward ratio, which is what everyone is after these days. They want to risk less to make more, which it does make sense, but you must understand the first thing. It must be in sync with your strategy. Number one, when I'm talking about in sync with your strategy, what I mean is this second part here. The amount of money you deposit into your account need to accommodate the number of trades that you trade with your strategy. If you know that your strategy is profitable after 100 trades, your account balance needs to accommodate those 100 trades, you understand? So if I deposit $100, is this $100 going to be tradable 100 times so that my strategy can kick in and start producing results? Is that possible? If your deposit is going to make that possible, then you can deposit your $100. It doesn't matter how much you deposit. But the first point is what I want to stress a lot, which is risking 1% of your account balance. Now people, they don't understand what it means to risk 100%, because we have all these retail strategies with huge stop loss sizes, and you know, it's quite difficult to trade a 1% account balance on one trade with these retail strategies that are floating all over the internet. But there are some strategies that can actually make you trade with at least 5 pips. if you are scalping. You understand? If you're scalping, I wouldn't advise you to go more than 5 pips on the stop loss. If you're swinging, I wouldn't advise you to go more than 30 pips. Even 30 pips is a lot. I would say your maximum should be about 25. And you should be disciplined, because what happens when you're implementing risk on a trade, you see a setup, a beautiful setup, but when you calculate your risk, you find that this setup is good, but if this does not play my way, I might lose more pips than I should. Most people, they end up taking those trades because they look good, and in most cases you must know that we can also get wigged out of trades before they move in our direction. And if you do get wigged out, you end up losing more than you were supposed to lose. You understand? But if you had stuck to that that limit of your loss, you would be able to go into another trade. Like if you were wigged out, you could say, okay, I've been stopped out prematurely, I can re-enter again because I know that my risk management plan is with me. You understand? So this is why I always emphasize 1 to 2%. And most people, they think it's impossible, especially beginners. They think these things are impossible until they start gradually getting familiar with all the trading concepts. Now, the one that most people like is the risk to reward ratio. Now, risk to reward ratio goes with your strategy. Okay, I'm trading my strategy 100 times. How many times am I winning trades? How many times am I making profits? How many times am I making losses? I'm making profits 50 times. I'm making losses 50 times. So it's like a coin toss, 50-50. So the best risk to reward strategy for me is a 1-to-1. I can take a 1-to-2. If I make trades, I'll make more money. 1-to-1 is the safest. Now, if your strategy is losing 40 trades, is winning 40 trades and losing 60, obviously you can't be trading now with a 1-to-1. You need to be at least trading with a 1-to-2 or a 1-to-3 and above. My personal preference, I trade with a 1-to-13, and my minimum is, I think I trade with the minimum take profit margin. It's like, yeah, let's say 1-to-9 and upwards. That's how I prefer trading. And my trading strategy, I know on its worst day, I lose 40 times and I make profits after 60 chances of trading. So it's a 60-40 on its worst day. On its best day, I know that I'm probably going to win like 90% of the times. And so the margins are quite huge for me, and I like to stay disciplined in the way I trade. So that's basically how you implement your risk management when you're trading. If you do this thing correctly, if you stay disciplined, because the one thing about the chart, it plays a lot in your psychology. And if you're a person that has a weak character, who's easily influenced by others, the market is going to play around with your mind all the time. You need to make your rules, stick to your rules, and follow your trading plan. This is how you stay consistent. This is how you stay consistent, sorry. This is what I like to call the holy grail of Forex trading. When you understand risk management and strategy implementation, then you're good to go. But if you do want me to teach you more about price action or teach you overall about trading, you can go to the link below. I do have a mentorship program that I have. You can click on one of the links. Either you go to my WhatsApp, I'll talk to you directly there, or you can go directly to my website and just purchase the course. Currently, the course is $50. But it will increase because I have a number of students that I'm currently training. So after I'm complete with those students, I'll be increasing the price. But you'll see on the website, or you can text me directly to get updates on that. So yeah, guys, that's it for me. I hope this made sense to you. I hope you understand how to implement these concepts, and these are the concepts that are going to make you profitable in the Forex market. Yeah, that's it for me, guys. Have a great day. Goodbye, guys.